Hello there, let's talk about crude oil. Over the last half a dozen years and even beyond that, before that, crude oil has generally been following these cycles, longer term cycles, lasting for around a half a year, just over 5 months. On average, we've seen cycles lasting for 157 days since June 2017. The way we identify these cycles, as I've mentioned many times in my previous videos, is we look at the behavior of the price versus the moving averages, as well as the behavior of RSI and market sentiment indicators. Now, zooming in a little, if you saw my post on Twitter, if you didn't, make sure to follow me on Twitter. That's my finance teacher without the last letter R. There wasn't enough space for that letter. I posted this chart on Twitter yesterday, suggesting that there is a chance crude oil retests this support zone that's somewhere around $79 to $80. That's based on a few support factors, including these local tops, that's around $79, and this 50% retracement since the previous cycle top also comes to that round number of around $80. Additionally, we have this local low on the 6th of October coming down to that area as well. So with a bit of a weakness in crude oil yesterday, there is a chance that crude oil wants to retest this breakout above this support resistance that took place last week. Now, after testing that support zone, there are a couple of scenarios for crude oil. One of those scenarios is for crude oil to continue its ongoing cycle into the cycle top, perhaps moving up to around $88. There will be some resistance based on this late October local high. Perhaps a bit of a cool down, and this cool down would be a retest of the breakout from the channel, followed by the final push towards the cycle top, perhaps reaching that resistance from the previous cycle top. And in this scenario, one of the indicators that you might employ to see when you want to scale out of your long positions is perhaps a bit of a negative divergence on RSI. Negative divergence is when RSI shows lower highs versus higher highs on price. So this is one of the scenarios I posted on Twitter yesterday. This scenario has a pretty good chance of playing out over the next several weeks. I would give this subjectively 40% chance. There are, however, reasons to be cautious as well, and there is a perhaps subjectively 60% chance for a slightly less bullish, more bearish scenario for crude oil. And I've talked about that yesterday for the members at myfinanceteacher.org. So for regular and timely updates, make sure to join us. That's myfinanceteacher.org. Simply scroll down and click this Join Now button. And for the more bearish scenario, cautionary scenario, we have to realize that the ongoing cycle has been going on for 99 days. Remember, usually these cycles last for just over 5 months, so we are likely past the midpoint, meaning that there is some chance that crude oil topped for the ongoing cycle a couple of days ago. So in this scenario, if we have already seen the top, then crude oil will likely start moving down into its cycle low over the next several weeks, perhaps first breaking below this support resistance around $79 to $80, retesting the breakdown, followed by a continuation down into that cycle low, closer to the average duration of that cycle, anywhere from 140 to 160 days. Another cautionary sign, besides the 99-day cycle already, we see that RSI came to 67.3 a couple of days ago. Yes, it's not into overbought yet, but it's pretty close, so again, there is some chance that crude oil has topped. Yes, it can easily go higher, but perhaps taking some partial profits, not selling all of your long positions, is not a terrible idea. Next, moving on to market sentiment, the optimism index on crude oil, while again, it's not touching this red line at 60 yet, it's come to 54, so not extremely far from the red line here. So to summarize the last several minutes into one sentence, there is some space to move higher for crude oil, but sentiment is not at the floor. It's much closer to the red line rather than the green line, hence starting to take some partial profits off the table again is not a bad idea. Next, looking at seasonality, over the last 10 to 11 years on seasonality, we see that usually March and April are relatively hard times for crude oil. That would actually coincide with probably a bit of a short cycle. That is, if crude oil drops down into late April, that would give us a relatively short cycle of nearly 140 days. Now, if we remove 2020, as that was a bit of an outlier pandemic year, you might say that usually March and April aren't that bad for crude oil. Yes, but even then we do see some softness in crude oil in March, usually in the middle of the month, but it might easily move towards the end of the month. Remember, seasonality is just an average price performance over the last these 10-11 years. That's why, rather than relying too much on seasonality, I prefer looking at a range of factors, including market sentiment as well as asset price cycles. And for a range of those factors and more, again, join us at myfinanceteacher.org. We have several categories here, and perhaps one of the most interesting categories would be juniors in metals, where we review some of the most promising developers that might give your portfolio the extra boost, extra torque once precious metals equities finally catch up with precious metals prices themselves. And by the way, a couple of days ago I published this best on the internet uranium report. That is a continuation of that part 1 video that I shared on YouTube last week. Have a terrific Thursday. Bye bye.